Control, and financial control is one of the basics of business which you need to get right from the off. There are 3 steps to it, which we've gone through before. Number 1, tracking. Number 2, predicting. Number 3, comparing. We're just going to stick on tracking just now. We've been through before the simplest way to do that through a simple entry system. This time we're going to do double entry for a slightly more complicated and bigger business. We're going to show you a spreadsheet and how you would do it for an example business. Let's get straight into it. Welcome back to the Basics of Business channel, everybody. And today we're going to go through a downloadable spreadsheet, which you can get through the link in the description, where we'll get to a double entry bookkeeping system. We'll show you the spreadsheet and how we're doing it. And you'll just, as I say, we've been through the single entry system where you can just simply use almost your bank statement to record what's going in and out. As businesses get bigger, we're moving to double entry. What exactly does that mean when we talk about double entry?
So we're going to go through a spreadsheet with the sales ledgers and purchase ledgers, and that way you can keep track of what you're owed and how old is the invoices that you're owed and whatever. And it's a sort of double entry system because you're keeping a track of the income and the asset of how much you're owed from your customers. And on the other side, we're going to keep a record of the cost, and then you'll have a record of how much you owe. So you have it on both sides. There's the debit being the asset, I'm owed money, the credit being to income. So although we're going to go through a spreadsheet showing those ledgers, these days very few people would actually use these spreadsheets, but it will help you understand what is going on inside Xero, Quickbooks, Clearbooks, or whatever.
And every business, whatever their size, whether you're bringing in £100 or you're bringing in £100 million, the principles of what we're going through here are exactly the same.
Absolutely. You know, the single entry cashbook that we used, you know, if it is a very simple business and everything is immediate, you get paid immediately, you pay for things, and it's relatively small and simple, a cashbook will be enough. But if you're raising invoices to customers and they pay you in a month's time, you're going to need a record of who owes you money. You know, you're not just going to wait and go, oh, what came in this week? Oh, I'll record that, because some customers just might forget to pay you, deliberately not pay you, whatever. So as the business gets more complicated or whatever, you need more information and more records. We're going to show you how you could do it on a spreadsheet. And again, if your business was small enough, you could do that. But what goes on inside accounting software is what we're about to show on this spreadsheet. So I think it would be, even if you are going to be using Xero or something else, understanding exactly what you're doing will help you understand the information that you can then get out of your software as well.
And we're going to get progressively, as we go through, we'll build in this spreadsheet, as I say, and cash flow, that we're starting to get towards that key cash flow point of, if people are not paying you, how is your cash position looking? But for today, we're sticking on that step 1, tracking, basic double entry. Let's have a look at the spreadsheet.
So you'd have a sales ledger and you'd have a purchase ledger, or as I've called costs here, the purchase ledger. So on the sales ledger, you'd have the date of the sales invoice that you're going to raise, the customer who you've raised the invoice to, the total. Again, as on the other video, I've included a VAT column. If you're not registered for VAT, then you wouldn't use that. You then have your net sales. I've said net sales too, because as we've said before, you might want to have a record of, different types of income. And then I've got a date paid column. So let's just say, for example, on the 1st of February 24, I've raised an invoice to John Smith. The total is £1,000. There's no VAT, and it's our basic sales. So you've now raised a record of the sales invoice that you've done. If you now you haven't got a date paid, so if you had lots of these and you could filter, taking out the date paid, you'd have a record then of everyone who owed you money. And if it was sorted by the date in column B, you'd have a record of who owed you money the oldest, and you'd be able to use that to keep track of your money coming in and out. Yeah, credit control and everything else. So very simple, but you know, if you are doing a few invoices to a few customers, something as simple as this would work and gives you all the information that you need.
But it's amazing, as in just by doing something this simple. I know, as well, this is, but why do I need to bother? As in, it is such a key part because it is so basic. Probably people want to move past it quickly. But even simple things like that, of there's a filter there, 4 invoices from the same customer, whatever. Just simple things like that. Like not necessarily when it's not together, you don't think about it. But through and going exactly that of why am I doing business with this person if they're not?
Yeah, and
if they're not paying me.
And yeah, if you go to if you're on your own, small business, having someone not paying you, you know, a few £100,000, 4 invoices, you know, that could be make or break of your business. You know, so having a system that enables you to identify what you're owed, are you getting paid on time? Is there an issue there? Are you overexposed to one customer or whatever? Absolutely vital. And if you went to, you know, big multinational, huge companies, they will have a credit control sales ledger function. There will be 1, 2, however many people just running that part of their back office.
Yeah.
Because it is vital. And if you are looking to get investment, if you're looking to borrow money from banks or whatever, being able to show that you have, you know, control over one of the most important parts of the business would be vitally important.
But that's why it's a basic of business, because it applies whether you're, as I say, whatever your turnover, whatever your size, it applies.
Yeah, if you're not getting paid, you know, if you're just putting up a lemonade stand outside the front of your house and people are paying you for a glass of lemonade as they walk past, you don't need a sales ledger. But if you are raising invoices and waiting for people to pay you on 30, 60, 90 days, whatever it might be, you need a simple record of who owes me money, how much, and for how long.
So why is there 2 net sales from that? Is that different VAT rates, or is it?
No, that's just me, just to illustrate that you could have, oh, I'm selling a particular type of equipment, or I've got another type of equipment, or it's the maintenance contract on top of it, or I'm going to be doing sales in London to sales outside of London. It's that bit of what information do you want to track? You know, this is the bit. So sometimes a little bit of, actually, I won't just have one sales column, because yes, you know, at its basic, you have to have one, but you might say, actually, I want to track some other information. I want to know, as I say, is it a different type of product or service, or is it geographical, or is it, you know, whatever age of your customers? You could have anything. So
you could call that column whatever you wanted, just to make sure you're, as you could call that London sales. As an example, you could call it, rest of the UK, etc. You could call that whatever you wanted.
It's just, again, it's just about what information do you want to track that would help you understand what's going on in your business. So when we go on to the purchase ledger, I've already put in an example. So 1st of February from Joe Blogs, we spent £1,000. We're not that registered, so we don't have to worry about it. The net cost is £1,000. Now, as on the cashbook video, we have various headings already put in there. So I put in a code A, because then that automatically says, oh, I bought some materials. But for example, let's just drag that down because being lazy on the second Joe Blogs, but actually this time we bought some software from them. So we make that a C, and it doesn't come in there. Thank you, Excel. Automatically filling in code. I didn't want that. C, so it automatically puts it into IT software. So again, these headings, in the same way as you can have as many sales headings and different things, you know, you can have whatever's going to help you to track what you're doing.
And there will be, and we'll add this into the download, there'll be sort of total columns at the bottom where it would then show you just at a glance,
Yeah.
Jinx, I'm spending £10,000 in materials, and my overall costs are 10,500. Jinx, what am I?
Yeah,
That's a column to look at.
exactly. You'd know how much you're spending each month. You could then do monthly comparisons, so January we did this much sales, February this much. You can see how the business is faring and what you're spending on travel or legal or entertaining clients, your phone bills, whatever. Having a record of monthly and sort of year to date, again, just tracking what's going on so that you can then use that information to, as I say, predict what's going to happen in the future. So I'm spending this much on entertaining. How can I get that? How could I reduce that? What would I need to do which would make me more profitable? Or actually, the more I spend on entertaining, the more sales I get. So how much can I afford to spend on entertaining? Because it's actually going to help the business grow. So so that would be the ledger. So it's very similar to the cash book. You just record, but instead of as things hit the bank account, you are recording the date of the invoice. So I've raised a sales invoice, haven't been paid yet. I've received a cost invoice, but I haven't had to pay it yet. So again, put the date paid in, and then with some simple filtering, you would be able to have a record of who you owed money to, how long had you owed them, and like as we had on the sales, knowing what you're owed. So that would just be a simple record there. You could sort of almost, that would be enough. You could stop there in a way, but usually you would then still have a cash book, which is the sort of the next stage. So as someone pays you, or as you pay someone and you put the date in there, you would then go to the cash book. And here I've put Joe Blogs, we paid them. I'll open that up, and we paid them the £1,000. And in this case, instead of A being materials or whatever, A is it on the ledger? So if it's on the ledger, you just want it in this column because the ledger has already analysed it out. So you don't need to have the analysis twice. We still have other things because, for example, you went and bought a tube ticket for £10. You wouldn't have an invoice for it. You'd have paid for it on the day. So you'd still need to just, you put it on your debit card or your phone or whatever. So you'd need to record things that didn't go through the ledger. You went to Costa and, bought some lunch and whatever. So you spent £25 on your Pleo or your debit card, whatever. It would have to go through there. But then when you've paid an invoice that's on the ledger, it just goes in the ledger column. And likewise on the sales side, you've received some money. If it was on the ledger, it's there. But if you do receive bank interest, that you wouldn't be getting an invoice for that. So you'd have your other that.
So how would that look if we had bank interest to add it in, say, today?
Yeah. So again, if you had it like the 1st of February 24, came from the bank, the amount received, I received £15 of interest. It's not coming through the ledger because I haven't got an invoice. You put that there, and then you'd probably just have that as bank interest. Other things that could go in there, maybe you get refunds. So you paid for something, and then it's not right or whatever, and you get money come back. So you might have a refund column. You might put your own money in. You might have actually lent your company £1,000 to get started. So again, that wouldn't be a sales invoice to go against.
So things like if you've got a company car, for example, and you've taken it in and TfL charged you the congestion charge by mistake and then refunded you, that would go into...
Yeah, that would come in here because it's money coming into your bank account that isn't in respect of a sales invoice that's on your sales ledger over here.
Okay.
And so and if you did that, then your cash book, we've got our other video on cash book, but your cash book is then complete. It has a record of everything that's going through your bank account in and out. But on your ledgers, the extra step is you've now got a record of who owes you money, who you owe money to. You're getting a bit more information that you can then use to track how you're doing in your business, how quickly people are paying you, or how quickly you're having to pay for things. And as we say, that then leads on to being able to predict things in the
in the
future.
future. So as I've said, so the spreadsheet is one way of doing it. At some point, there's a decision of when you move to software. We're going to move on to predicting in our next video. If you want us to have a look at software to sort of part of this track process, let us know in the comments, and we'll run through a dummy example in Xero of how exactly the same sort of thing would work. I say, hope this has been helpful. We'll put a link to this spreadsheet, which you can have in the description, and download. We're now going to move on to the second part of financial control, which is predicting, which is another element of this spreadsheet. Click on one of those boxes on the screen and have a look at that now.